Hi viewers, let's start today's analysis. I think we just focus on some broad things today. The reason is very simple that what I am seeing from outside is that the Nifty is getting tired, and also I'm seeing the US market also tired. So I think in some time to come we might see some correction from the US market and Indian market because they have shown quite a bit resilience and they've been ignoring many bad news. So before we come to that, today is actually the you know the important thing that to be noticed is the commodity price. So today, while I'm recording this video around 15 or so, gold is down by 1.5%, silver is down by around 2, crude is again down by 2% after the yesterday's fall of around. Copper is down by around 3%, zinc is down by 1.5%, aluminum is down by 1.5%. But on the contrary, all the equity markets are not showing any sign of weakness. Today, Dow futures are pretty okay. Dow is in green, Nasdaq is in red. Nifty has also ended up pretty flat, nothing much, neither upside or downside. Even Nikkei, if you see, or the same market, or Kospi, Trade Times, Hang Seng, they have given, or they have been actually able to close in green. So then, what is the dichotomy? Where is the dilemma? Why exactly are we seeing two different price scenarios of the commodity market as well as the equity market? I saw the dollar index also was pretty flat around 99, so no change there also. So what are the commodity markets signaling to us? Are equity markets becoming showing too much of resilience? Are they ignoring some bad news? This is what we need to ponder today. This is what we need to understand today. See, generally, what we see is that the crude oil markets are generally very forward looking. Even the bond yields are very forward looking. Bond markets are generally they are told to be wiser than the equity market. And most of the times we have seen that even crude oil and especially Dr. Copper, as we call copper commodity, they are also generally able to gauge the market very well. Now, today, the bond yield, as we talk, it's around 3.15. So it has come down by around 1.15%, 0.15 basis points in last 3 4 days. It was hovering around 3.35 some time ago, maybe a week ago or so. Now it is again closing to around 3.1, and I think with this kind of numbers continue of the slowness of the US economy. Yesterday, some numbers came from US economy where the consumer sentiment was again at a low, like at 1 year low. The consumer spending is low last, this has come to a level last October. Many numbers have come yesterday which are showing signs of slowness in the US economy already, right? Now, this is where I think the commodity market and the bond market are moving. Bond markets, again, they are very, very good in terms of taking the economic strength and parameters. It is going down. Dr. Copper is doing a big cut today. Remember, copper has been very resilient throughout the financial year. And crude, now it has slipped into, if you talk about Brent crude, it's around $60. So we saw a pick in the crude, uh, reached to around $68 again. It has slipped another $5, is now hovering around $60. And I would not be surprised today. A lot of numbers are due for the US, especially GDP numbers. I think it is tomorrow or today. I'm not very sure. I think it's mostly tomorrow. So with this kind of big numbers coming up, I think GDP numbers are there, job reports are there, and there are many other numbers which come from US. But the commodity market today is showing you signs of slowing down at the world level. The growth coming down at the world level. I'm not surprised that today's US market, suppose they're showing in futures, I don't think actual markets will turn out to be in that way. I think we'll see some cuts today in the US. This is my strong feeling. And also Nifty today have been in green because of Friday. It was totally index management because if you see HDFC Bank was 1% up, Reliance was up, they kept the pieces and pieces pretty much in green. I think it was just uh, purely index management. Bajaj Finance and Bajaj Finserv, the two twins of Bajaj, saw major cuts today, and to nullify that, I think we had some buying from stocks, which are big stocks of Nifty. This is where I got slightly worried, and I may be wrong, but this is what I could cash down. Nifty Bank was today negative. Nifty FMCG, Nifty metals, Nifty IT also was slightly in red. All the other indexes were in red. Nifty slightly managed to be good stocks, which is why I'm saying that it's purely index management. And also, if you see SPI, whose numbers are due on 3rd of May, which means today it is, let's say, one or 2 days later, it was down at one point of time around 3. So either before the numbers, the market is nervous and they want to go profit, and that is why the market is showing you a kind of weakness, or which I generally say that market knows everything, and probably numbers are not that great for SBI and the market. Both things can happen, but I would personally see that probably maybe that the market is bouncing back after SBI. Although there is no reason why we should get bad numbers. But don't forget, uh, the, the PSU bank was the last to pick up among the banks. In the banks basket, if you see, it was mostly SBFC Bank, ICICI Bank, Kotak Bank. Uh, they all actually went to all-time highs and then followed by a slight rally in Axis Bank. So it was mostly in the private sector banks, large private sector banks were leading the rally. PSU bank picked up anyways later. This again shows you that the market is showing lesser confidence in the PSU bank, and they have now slipped also before the private sector. So that is why I see that probably bank Nifty also getting slowed down, going down. We already discussed yesterday that all the other indexes, whether it is Nifty Metals, Pharma, I think that they all are showing signs of some kind of fatigue. Yes, again I say 24,800 is possible because money is chasing. There's a lot of liquidity. Yesterday also there was a lot of time for price. So if liquidity chases, then there is no stopping, and we may reach the bit. But I still maintain my stand. And seeing today's movement of bond yield, yesterday's numbers of US economy being shown there, China again getting difficulties in terms of maintaining their factory workers. I think yesterday they have reduced the tariff on methane gas, which is for methane gas from US. So they are also feeling the pinch of tariff. They're also taking some steps to ease out the curve on the tariff to help the industry. But this is not tariff. It's too much for any country to, it is export oriented to handle a lot of things. And I think the world economy, if at all this matter does not get involved, are things. So yes, India is relatively well placed. I'm not denying that fact. And India can grow faster. But the problem is, if you see the last, if you post-COVID growth of India, see, we all know that the earnings growth of India has been more than 20% for the last 3 or 4 financial years, especially from 2021 to early part of 2024. It was only later part of 2024 that we saw slowness in the earnings, which is continuing till now. But the most of the earnings growth, two-thirds of the earnings growth actually came from export oriented. Now, if that will start going down, irrespective of whether it is relative advantage to India, but if the overall world economy will start going down, it will slow. There's no denial of the fact, and it's not which I am saying it. If you see the World Bank numbers, the IMF numbers, growth numbers of any agency, people are cutting down the growth numbers of the overall world market, US in particular, China in particular, there are downgrades. Yes, India has seen only a minor cut of around 0.5% in terms of forecast, but most of the world, if you talk about the world market, into the GDP growth, they are all showing signs of slowness, and the forecast is also on the similar line. And the way the numbers have started coming from US for this month onwards, this is the first month after the tariff has been placed. Now we start seeing numbers of April. So whether it is inflation, whether it is your job, even the job openings, it is the lowest in 1 year. Yesterday the numbers came from job openings also, it is the lowest in 1 year, right? And The one more data which is captured there is the time taken for finding a job that is also increased. So overall, I'm saying that the tariff is only 20 days old, and we are seeing signs of nothing this will continue. And this is what your commodity markets are showing you, and this is what your crude oil prices are showing you, and the bond yields. Equity is slightly moving in the upward direction, but we all know how fast equities can adjust. They are very fast to adjust. We saw how the markets were happening with those markets when the tariffs were announced. We saw 1,500 points on one day on Dow, Index, and 2,200 points. So that became almost 9 to 10% in just 2 days. So equity markets are very fast when they come on adjusting these kind of realities in the economy. According to me, there are enough hints, at least as of now, to understand that yes, there is a problem in the economy world, and even the numbers which are coming from India and outside are completely showing some kind of slight resilience. But if you even see the banks, the place where we are mostly optimistic and there's the earnings growth, but the credit growth forecast for many of the banks is around it's not even more than 15%. Has been the average for many of the Indian banks coming years. So overall, I see that probably we'll have those kind of downgrades in terms of spending. Yes, the uncertainty in terms of tariffs may be slightly over. We might have some hangover on the Indian Pakistan, what will happen in terms of our valuation, some kind of attack India will try to put on Pakistan. But even if you see that uncertainty, if you slightly remove for the time being, you just forget. Although I don't rule out any knee-jerk reaction if something big happens, there will be a knee-jerk reaction in Indian market. See how much matured we are, how much we all know from history that during the war nothing happened. Ultimately, goes settle down. But at least at that moment, a knee-jerk reaction is always there, especially when you are sitting on the higher side of the Nifty or the market. We are not on the lower side now. We are on the upper end of the spectrum because we are almost close to the earnings we have seen till now, and if you apply a reasonable ceiling factor, we are already there. Now, whatever we grow in the market, will be actually borrowing some future discounting into our prices right. That is what going to happen. And I've told you this is because FIs are increasing. They have nothing to hide. There's no place to hide. But even the US market was showing a lot of resilience, which is actually surprising and should not be. So there also the problem is that people have forgotten that equity can also slide, equity can also be slow. They've actually forgotten that equity markets can give you negative returns. Actually, just people have forgotten that. That's why probably people are ignoring these facts. According to me, I still believe my analysis, my feeling, just studying everything, that cash is the thing. This is the time to actually see cash, sit and relax and just keep on observing what is going on in the market. Some real opportunity, you can always catch on to that. We may change our view. Nothing stops us from changing our view tomorrow only, maybe today evening only. If we see some kind of optimism, if we see some kind of improvement, some kind of cycle turning around, then of course we'll change our view. Suppose today China and US try to form a deal. It's going to be difficult, but let's say they form a deal. Yes, those dark clouds probably they'll be removed and we'll see higher growth the overall worldwide and we'll see growth in commodity market, bond market, everywhere. Right? As of now, it is commodity markets are showing you that we are entering into a uh, slowness in the economy. If 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 copper prices, food prices are able to reach the market very well, and especially bond market, then I think there are enough signs of slowness in the overall world, and that should also bring the industry down because don't forget the major earnings growth we've seen from 2024 was mostly two-thirds were export oriented things, with where we played the China present factor and many other things. Now that may still play. I'm not denying those facts, but as of now, it is not simple. It is not impossible because of China and US going down for this year of this is what I could make out and overall. SBI, I'm not pretty sure because it's just because of the numbers, just for the numbers, or market is actually sensing something they already know. If they already know something, then I think it's a bad thing for the bank also because see, understand one thing. Now ICICI Bank is trading at around 3.2 times price. Right? Again, a very very substantial price. HDFC Bank is now trading around 2.9 times price. Kotak Bank is trading around 3 times price. So yes, we may have tried the bridge that HDFC Bank is like you want from here, but that is also just slide. Otherwise, the banks are very optimally priced. Return into three multiples from its view, HSBC Bank today is at who has HDFC Bank and Kotak Bank is trading around. So I don't think there's a lot of room left. And on top of that, if you start seeing some kind of negative, earnings from the PSU bank, for whatever reason, I'm still able to not able to analyze why they should go, why they should go earnings growth. No, but if at all the market reaction is correct, and if you have to sense something out of it, then probably Bank Nifty has also made it stop. We will not see now Bank Nifty going again fast. And it actually was a classic sell-on news which happened yesterday when there was a announcement of 1.25 lakh crores of bonus from RBI. That time, the Nifty Bank rose by 100 points and was quickly sold out. Actually, it closed in red on that particular day. So, with such a big news of liquidity gushing of 1.5 lakh crores and still Bank Nifty getting closed in red, that is actually showing you that either the one day before they were already it was already priced in and that time became sell on news, or probably the levels of Bank Nifty for at least this current quarter and this particular level where we see is already done. Now market will wait for 1 quarter, 2 quarter earnings to add up, and probably Bank Nifty can go to 6,000 if you already maintain that yes, this year we will see Bank Nifty going towards some discount because we are seeing some kind of continuation in the growth of earnings. But overall, if the PSU basket turn out to be as the market is going today, then probably we already made our top for this rally, this 56,000 done. That is the end of it. Probably now we'll be entering into a correction mode. A correction can come due to any reason. See, if markets will feel that we have reached the high of this rally for the time being, then they will find any reason for booking profit. It can be tariff, it can be India Pakistan, it can be any reason which they'll find they'll book profit. So if you do book profit means you do book profit. And don't forget this time FIs have been buyers. They've actually been buyers right from the day where the announcements were done for the tariff announcement after. So वहीं से वो buyers हैं, which means they're already sitting on decent profits because don't forget they have a lot of profits in their derivatives. So they are already long. They're continuing to be long. That is why they are already making profit. So we can see some sharp uh, profit booking from here on. And if the FIs have thought, no, I want to take the index to 24%, that might also. But they are the people who have guts to buy it at a higher level. And anyways, see one advantage in the favor of FIs and one advantage in the favor of the market is that the shorts in the system are very less. I think it's around 17,000 contracts as of today morning. I don't know what was the date today. I would have put it was Friday also. We have to see the numbers today night and the actual numbers come. But as of morning today, we were less than 20,000 contracts short. So actually their shorts were very less, which means that market or at least FIs are looking forward towards the long term. But that is also a danger also. This is what happened in last October when they were 80% long and we saw some massive profit booking and we saw the market things around both things. So today's I would say highlight would be the commodity prices. Keep a very close eye on that and the GDP growth numbers that from US and the job numbers, etc., which are economic parameters from US will be coming from today, tomorrow, and probably the rest also. So this week they will have a lot of economic parameters. Keep that in perspective. We already discussed our numbers, how they're coming, so it's not difficult at all. Pretty much the same thing which I told yesterday about the NSA is pretty much the same. So on numbers, crude oil, and the quantity. Keep a track on that. It's showing you something. Be aware. Take close with these numbers. Judge how is that going. With this, I'll end my analysis for today. Thank you so much for your time.